Hello and welcome to the Digitals in a Cruel World podcast brought to you by the Digital Disruptors. This episode is sponsored by Xledger, the mid-tier finance system that's focused on advancing business process outsourcing for all of your larger clients. We're always going to be joined later by Ian Gregory from Advancetrack, and we'll be diving into the impact of AI not only on the profession but also on outsourcing and how Advancetrack are pivoting their services to advance what they do and also help the industry. But I'm not alone today. I'm joined by the infamous John Toon, who has climbed out of the rock of due diligence after the quite big announcement recently of the merger of Menzies and Beaver and Shuthers. So, John, I assume you've not had any sleep for about 3 months.
It feels a little bit like that, Ryan, to be fair. I'm not sure if that's down to the due diligence and the work, or whether that's just because I just can't sleep. Or just too busy partying or whatever it is that I've been getting up to. But yeah, it has been a hectic couple of months. It's good to see that the announcement's out in the open and not having to sort of pretend that I'm doing other things with my colleagues anymore and stuff, which is quite nice. And yeah, very exciting, really exciting future and opportunity. So it's all for the good. So this merger with Menzies will turn us into, I think, pretty much a top 20 firm, or not far off a top 20 firm. So that's very exciting. And along with that excitement comes a certain level of trepidation when it comes to having to merge two practices together and all of the technology and people change requirements that will go with it. So I may end up looking like you in 12 months, right?
I'm joined once again by Ian Gregory, the CTO of Advancetrack, and we were talking on the last little chat that we had about the fact that Advancetrack can act as that bridge for accountants if they need to go through that systemic change as AI starts to erode some of the compliance value, I guess, of the services they're delivering. But that does beg the question of, for the future of outsourcing, is that just a short-term play, or is there a longer-term, I guess, collaboration, not only, I guess, for that transition period, but supporting firms on that longer term journey?
We certainly see that we have a future. I mean, we see all of the hype and spin around AI at the moment, and clearly we've asked the question, what does that mean for us? And we've been looking at that for several years now and come to the conclusion that there is a future. There's a future in terms of us being a bridge for our clients. So in the next few years, we'll see that working out in terms of supporting our clients through helping them with their processes, helping them to take on board AI, and providing them with human support as they reconfigure their businesses. But in the longer term, one of the things I mentioned in the last podcast is that, manufacturing, which I used to work in, they were looking at automation for decades, and 30, 40 years on, everything is still, there's a lot of manual work in there. And the reason is that having people involved in the process means that you can improve it. Means that you can spot quality problems as they appear. Means that you can actually come up with insights from the process and pass them on to the customers. So three good reasons why you still need people. And if you look at manufacturing, the people who try to automate everything, what would happen is they'd build a super duper production line. If it went wrong, they'd churn out thousands of bits of metal, which they had to rework before anybody noticed there was a problem. And I can just imagine that happening in accounting and going back to your customers going, sorry, there was a software glitch. You're going to have to change all your accounts. How long is it going to be before that risk is mitigated? And in terms of improvement, particularly if you're going beyond just the pure compliance, that there's a need to look at those processes and how you can improve. And I think what manufacturing found was, even in the best automated processes, unless it was incredibly high volume and standardized product like cigarettes, let's say, it was better to have a process that had a lot of human content, and Toyota being the benchmark in that respect. And I think what we see as an outsourcer, we can effectively be a human-led accounts factory competing against purely AI ones that have strengths in some areas but weaknesses in many others. So I think there's a niche there, and I think it's going to be interesting to see how the industry plays out in that respect.
I think it's a really good parallel when you start talking about manufacturing, because essentially what happened with that whole boom in manufacturing is that a lot of what was done, I guess, say in the UK, was then offshored to a different geographic region where it was more cost effective to deliver that, but still keeping the very customer centric face in the UK. And the structure of how that was delivered, and it became very much more an international way of delivering, I guess, a service, a good, a supply. And we're very accustomed to that with manufacturing, but less so with service. And I think that's something that will evolve. And although you may be, a bridge, pretty much a lift and shift, this is the service we're delivering, we're just moving that offshore for a time being whilst we get our structure in place. Elements of that I still think would remain. And it may be that there's, support, for example, like if they've got software or just general query support, that may sit in an Advancetrack, but some of the more kind of regular one-to-one meetings may sit locally. Is that something you could envisage happen, that, paralleling what happened in the manufacturing sector, the whole dynamic of the way accountancy service delivered gets structured, split up and spread out into different geographic regions?
Yeah, I mean, if you look at manufacturing, when people first started out offshoring to China, it was because they're cheap. And now, actually, the Chinese are far better at manufacturing than anybody else. And even companies like Apple that have tried to reshore to the US have struggled. And they struggled because of things like they can't get screws, and then the talent just isn't there. And I think if you look at what the big four accountants have been doing, they've been offshoring for 20, 30 years. And gradually over time, the sort of things they're offshoring has gone from the really basic things where cost has been an issue to actually some very sophisticated stuff. Yet they've still got big teams here dealing with the clients. So I think, a business like Advancetrack, we very much see ourselves as being a back office to support our customers as they move up market into the areas which are effectively done in the UK or the US or Australia or wherever. And we can just be really good at the delivery bit behind the scenes.
Yeah, the other bit is because you get the benefit of working with different accountancy practices, you can see what all of their individual requirements are, or their differences are, and then shape your delivery to make sure that you can pretty much service any nature of engagement. Whereas if you're working with a partner that's not necessarily used to that, then they're learning from you, and it's a much more challenging initial period as they're having to adapt to not only understanding potentially the accounting profession, but also the very varying different ways you work. And I think that, I guess, a big positive of this is that most people, when they're looking to offshore, they're looking for a long-term partner, and they want to make sure that you're in there not just for the short-term win, which could be large as we're talking about that bridge, but also the long-term plan, how you evolve to and adapt to supporting them as they evolve and adapt. And it sounds like you've already planned that. You already got a good vision of how, as firms evolve in the UK, Advancetrack evolves to meet those needs. Is that a correct assumption from me?
Yeah, we'll evolve with our customers, but also, as you say, we get to see a lot of customers. We get, we've got people with experience in other sectors, so there's a lot we can draw in from let's say manufacturing in my case. Equally, we can see what's going on in the Australian market, in the US market. The peaks and troughs of demand in those markets is different, so we can get economies of scale across markets. We can get economies of scale across UK accountants as well. So there's a lot we can do as a outsourcer across multiple firms that any other than the really big firms could do internally themselves.
Yeah, and you've always focused on this blend between tech and people. You've done it inside of Advancetrack, and as AI starts to take more of a hold, obviously you're going to use the tools that enable you to enhance your service and deliver more and more effectively. And what that does mean is that you can be a sounding board for other firms that are trying to do this. So maybe your services evolve, not just for delivering, supporting them with their outputs from a compliance perspective, but also potentially into an advisory element regarding supporting them on how they evolve. Now, I'm not saying that exists. I'm not trying to predict where you're going to go, but it just, to me, makes sense because you're going to be doing that as a back office engine for so many firms that you would have gained so much insight that it kind of just falls out, right?
Yeah, I mean, we're already doing work for some customers where we're driving their clients' management accounts processes and producing the reports that they review with their customers. So some of that groundwork for the advisory is we're already doing, and we see that as potentially a growth area. There are lots of different areas we can grow into and adapt with our customers as we move forward.
Well, it's very fascinating to me, and I'm learning as we go about Advancetrack and what you're doing. So this is great, and I can't wait to the next session. We're going to dive into a specific, relatively recent release that you've had as well. So thanks, Ian, for joining us once again today.
Great, thanks very much.
I've got something to cover, which is the latest small business index release from Xero, released in June 2025. They take this from the global data that they've got access to across all of their client customers and stuff, obviously anonymized and sort of shrunk down to kind of then paint a bit of a picture for what's happening in their regions that they cover. And there's always something really exciting and insightful in there. Generally, across the globe, they're starting to see a general slowdown in sales, and that's trending downwards almost across all of their territories, and actually relatively consistently as well. And this is in the context of central banks across Australia, New Zealand, UK as well, reducing interest rates. I mean, we just had that, when was it, last week, that announcement as well here in the UK, which is obviously designed to try and stimulate growth and stimulate a little bit of inflation. And so we're sort of seeing this kind of, I guess, this tailing off of growth, which maybe might start to recover again in the future. In the UK in particular, retail sales were the weakest industry. They saw a quarter-on-quarter shrinkage of 0.6%. Real estate services saw no growth. But then hospitality sales, interestingly enough, although they had grown, they were below the national average. So they were up by 1.5%, but I guess that's way off. That's only just touching on sort of inflation, I guess, and we know that food prices and other things in general have gone up much more than that. So a real world, or an effective sort of shrinkage in that space. The only thing that they said were discretionary spending seemed to have increased was in arts and recreation, which is interesting. And then the last thing, just to wrap up on this, is just to talk about the usual things that we sort of see in this, which is a focus on cash flow, seeing cash flows generally slowing down and stagnating, and that kind of operating cycle to slow down, which is always a challenge. And a bit of a hint from Xero, which is to talk about making sure you look after your customers and engage and give your customers a good experience. So number one, you get paid a little bit quicker, but also obviously you might get some repeat business. So some good tips from there. We know we're in a challenging operating environment. So that's it from the Xero Business Index.
Yeah, I find this interesting every quarter, and I think it's good that they do this and make it very clear where we are, and maybe explain some of the big headline numbers we see in the press. I've got something on AI. Avalara has added an AI for tax compliance queries. Now, this is mostly focused across in the US, where they've got a very complex multi-jurisdictional tax system. But what's very impressive about this is it gives back answers pretty much instantly. Now, we've explored some tax, advisory tools in the UK over the last few years. I don't think any have taken off and dominated. We've had some that have come in and then kind of pivoted into an AI base. But Avalara, huge system. If they've managed to get something to work, I think this is going to be very, it's got a big chance of rolling out to a lot of people, especially as they've tried to hit a very complex tax market from the start. So what I guess I liked about this article is that what we're, I guess, going to see is more of this. This is only really the start, in my opinion. We're going to start to find that advisory, the core thing that I guess we have been holding on to as the defense against AI eroding compliance in the UK is actually going to start eating into what we'd call normal base advisory. And if, I guess, clients rather than accountants and advisors can get to this information as well, then I think that we're going to have to enhance, once again, further our service to probably provide assurance around this. So what are, I guess, the kind of questions we should be asking? What's the nuance and the things you need to, I guess, caveat whatever your question is in relation to? Because whenever you've got tax, if you don't mention something specific, you're only going to get back a very specific answer that may miss a very key bit of information that's related to your specific scenario. But I believe this is going to be the start, and is going to start getting embedded into lots of other, I guess, compliance-based systems. So we've always had the traditional CCH. I've forgotten every other system at the moment.
Digital, Iris.
There you go.
Elsewhere.
Those are the other ones. Yes, Alpha Tax. Those ones where you'd be going to them for, as well as a compliance side, some advisory to support you on the tax side. I believe that we're going to now see a boom of this into other systems as it becomes simpler and easier to train these AI models on a very large set of data.
I know it would make sense, wouldn't it, given the kind of services that Avalara offer, to kind of make it available to any customer if they've got a potential query. Maybe the opportunity for Avalara here is to kind of wrap that into saying, oh, well, here's a partner, or here's an accountant that we know specializes in this indirect tax or sales taxes or whatever it is that you're going to get a response about. So that might be more comforting to us from a market positioning point of view, because I guess the only other thing that I'm familiar with and which I've seen is a product called BlueJ, which came from the US as well and now is in the UK, and I think we talked about them quite a while ago because they announced a partnership with KPMG, KPMG if I remember rightly, to help with tax research and to support tax research done by professionals and when they're providing advice. So yeah, fascinating. Well, we're just going to see more of this, aren't we? We're going to continuously see more of this for sure. Okay, moving on. I've got an announcement from Sage, which is an acquisition that they made just a couple of weeks ago, the tail end of July. So they've acquired a product called Fyle, Fyle, and of course it is AI powered. That's all important. But what Fyle is an American-based product which helps with expense management, and in particular, it sounds quite similar to probably some of the other things that we'd be more familiar with here in the UK, insofar as they're card agnostic, so you can connect your business cards up to the platform, and it'll track spending. And then it will send you an alert to obviously upload a receipt or an invoice or whatever to accompany that. And that's effectively how it works. So I guess a version of Expensify, an American version of Expensify, I guess, in some respects. And they've made this acquisition. Fyle have been going since 2016. And it's the usual story. The founders are frustrated with their expense experience, so they thought they'd build something themselves. And now Sage have picked them up, and they have 150 employees and over 1,600 direct customers in the US. So a great acquisition for Sage. Ties into their ecosystem already because you can already connect this into Sage Intacct, Sage 300 Construction and Real Estate, which are kind of like their bespoke products for those particular areas over there. And they have said as well, good on Sage, is that I'll keep the pre-existing third-party integrations available and in use for anyone that uses Fyle that connects into something else. So that's always a positive. I like to hear those kind of stories.
Yeah, and I think that is something that Sage have actually put at the core of everything they do now. I think when they got to that point where they felt they were a bit behind, actually it didn't make sense to cut everyone off. Let's just buy and build the best products and make sure that we're just trying to guide people back into our core system. And it does sound, based on the systems you listed, that this is aimed at a larger style client because they're connected into Intacct, they're connected in 300, not the baseline. But it's pure US. We have not seen this at all in the UK. I've never come across this. So it'll be interesting to see if this does come across the UK shores. It makes sense to. I don't think it competes against the likes of auto entry. I'd say it complements it.
Yeah, I mean, of course, in the press release they talk about SMBs and the fact that they serve SMBs, but you're absolutely right. Those kind of integrations that they've got do generally serve larger organizations and slightly more complex organizations than I guess would be leaning towards an auto entry. And also, from personal experience or professional experience, I always think that you tend to have businesses are a little bit larger that tend to have slightly more complex expense management requirements wrapped around some kind of card, whether it's their own business card or a bank provided card or something, whereas smaller entities tend not to have that kind of requirement. Not always the case, but generally that's my general experience.
Yeah, very true. Well, I've got something else from Sage, and this is a big announcement. It's not a system, they've not bought anything, but they are aiming to eliminate financial close, which is one heck of a big objective. And the way they're obviously planning on doing this is with AI. How else would they do this? But it's to pivot from, I guess, that cyclical way of us working generally in the profession, be that in industry or in practice, where we get to the end of any given period, be that month, week, year, quarter, and then we complete reconciliations. We do all of those adjustments we need to do, taking things from a cash to an accruals basis, bringing in WIP adjustments. All of that gets adjusted on a continuous basis. And then, if possible, have that reviewed and provided assurance on a regular basis. Now, obviously, this is not a short-term objective. This is a much longer objective for Sage. What they're essentially setting out is that we are going into the realm of AI. We're bringing AI tools in. We are now starting to adopt AI agents, but we need a long-term objective to push or to focus everything we do towards. And I think there is probably nothing better at this point than eradicating financial close as an objective, because it's kind of become the backbone and just expected way of us working, but there's no real must for it if you can work in a day-to-day live transactional basis. We're now seeing like expense capture tools that are bringing in prepayments and accruals adjustments. We've got integrations that automatically adjust for work in progress and stock values if you've got that set up correctly. So as long as you've got these review processes that are also looking at how you're doing with VAT treatment, etc., you're getting your journals posted in, you're moving closer and closer to real-time finance. The bit that I thought was a bit more of a leap is when they said it's not just about the financial close, it's making in real time the annual audit, the filing of taxes and accounts. That's a bit more of a leap for me. And the reason for this is, I think, John, you and I started looking at a program quite a long time ago, maybe 3 or 4 years ago, that was designed in a way to start to bring continuous assurance or audit. And it didn't really get anywhere. And I think the reason it didn't really get anywhere is because audit firms are working with businesses that are on multiple platforms. Your system, that if you're doing an audit, needs to work across all your clients, but then would need to integrate into those systems. And that was really tricky to resolve. And I don't think just one player in this market, I guess, getting their system to be nearly, continuous is enough of a trigger to enable annual audit. But, this is your area, not mine. So I'd be intrigued to see what you think about getting to a continuous audit process. Is that really achievable?
I think you've nailed it, Ryan. I think it's that multi-platform challenge for an auditor or an audit firm that really presents a problem. And just having one product, whether it's a Sage product or whether it's any other product with a different badge, isn't going to be persuasive enough for that audit firm maybe to then convince their other clients to move to that platform, unless there's some other peripheral benefits. So it's going to be a bit of a challenge for a firm to sort of say, oh, well, we can do continuous audit here with 5% of our clients, but the other 95% we've got to carry on doing the other thing. So I think for now, this is an interesting thing. I mean, it'd be really interesting to see how this gets implemented from a technical point of view and to sort of see what that looks and feels like and whether it does give the kind of assurance that we'd be wanting. But for now, it's probably not quite enough. What I do find really interesting about this story, though, is that we've seen a lot of products, like Blackline, for example, which have been talking about ending financial close, and they connect into these more complex products like NetSuite, SAP, and Intact, and others. And I guess in the same way that we see this in the Xero ecosystem of apps starting to leach back into the general ledger, we're starting to see the same kind of thing, because this is a real pain point for larger organizations. And we were talking to Paul Sparks from iPlicit about this, and that'll be out in the next few weeks, about this is an area of focus for them as well, in terms of trying to make this month-end process easier through automation and the use of AI and other technologies, so that that heavy lifting, I guess, is taken away, and you can close the books more promptly. Now, of course, the one thing that you can't do is you can't encourage your suppliers to send you invoices promptly. And so you could have the best automations and the best technology in the world, but if your suppliers don't send you invoices until the third week after the month end for the previous month's purchases, you've then got a choice, haven't you, about do I do accruals and estimations and other things, or do I just sit and wait?
That's a really interesting point, because there's two things here. Partly, I think they're the role of the strategy, knowing that there's some external factors that need to impact that, be in e-invoicing being one of those. Yep. We expect it to come in, we expect it to have an effect, but they do specifically talk about mid-market systems. They do specifically talk about Sage Intacct, and that they've added a closed workspace hub directly into the Intacct model, which is looking at those financial close tasks. So one of the main examples it gives is that you might have purchase orders which you haven't received the invoices yet, and automatically calculating the accruals based on that, which kind of answers itself, that you can now in the Intacct system do one of the things you flagged as a pain point. And I think there will be lots of these little fixes to some extent, and it will be a continuous evolution towards getting to that continuous close. But I think going back to, I guess, the main point of this article is that they've set out their shining light, what they're aiming for, and I think it's a really good pinnacle of an objective. And I'd like to see lots more businesses, brands do a similar thing. Like, where are we aiming? Where's our focus? What do we want to achieve? Even if it's going to take us a while to get there, there'll be steps to do that. Come and join us on that journey to achieve it. I think this is a really good message from Sage.
I completely agree, wholeheartedly agree with you on that, for sure. Moving on to something else then. So BrightPay have released a whole bunch of updates. They've been in a very challenging transition away from their very well-regarded desktop product onto their cloud product, but they've just chucked out an absolute ton of new features into their cloud products. In particular, which I think is really good as well, they're focusing in on security and improving the security of the product and the way that you access the product as well. So, they should be giving kudos to that, because quite often, sometimes, when we move from a cloud to when we move to a desktop to a cloud product, security is sometimes one of those forgotten factors, which needs to come in and give people reassurance. So let me just run through very quickly what they've launched. They've enhanced their client collaboration portal with the ability to allow clients to interact with their payroll data. And this includes giving them the ability to upload and enter their own payroll information. So this is a real bugbear for most payroll bureaus, particularly if you've got people working on an hourly basis, because you might be collecting information in all manner of different ways, from some sort of integrated system to Excel-based lists to paper-based lists. So they've added that functionality that helps to extract some of that information, make it a little bit easier, and also not just stop there, but allow the client themselves to verify, check and verify and review and approve that data as it goes through this process. So it's not kind of going into the system, getting handed off to the payroll team, who might look at it and go, oh, I'm not sure what this is, and then have to hand it back to the client. It's the clients actually being actively engaged in the platform as part of this process, which I think is really, really cool. They've then added some additional functionality to the client portal. So that now means that you've got more access to more reports, better access to payslips, calendars, HMRC details, leave information, etc. You can actually set up unlimited number of users on the platform now. So they've taken that restriction away, which used to be there on the desktop system, but wasn't there on the cloud system originally. You can have much more control over tailoring the user experience of logging into that portal. So you can give it some branding, you can give it some more effective functionality and communications around that. So I think that makes it a lot more aligned with what bureaus and their clients are trying to achieve. And then the last thing that they've done is like I say, they've increased the employer file limit, so you've gone from 250 to 300 employees. So you've got the ability to have much bigger payrolls uploaded into the system in one single file, so that makes life a little bit easier. And then they've wrapped around two-factor authentication into that with some additional security to make that data really secure, because clearly this is people's individual personal information that needs to be protected. And then the one last thing that they've added is enhanced the functionality of the modular integration, which allowed you to make payments. So there's a broader set of banks supported, and now you're able to actually get that payment process running a little bit more effectively and a little bit more quickly after the point, including, and again, a typical thing that you'll see in payroll is you might get last minute adjustments coming through. So if you've already booked a payment based on a what you thought was a final payroll, and then something comes through at the last minute, you can actually go back in, update your payroll, and then republish that payment back out, assuming it hasn't already been done. So you've got less of a faff about if those last minute changes come in. So yeah, great set of productivity releases, I think, from Bright there.
Take a breath, John. That was a mammoth release from BrightPay there. I mean, we don't always cover stuff from BrightPay, but when we do, it seems to be very detailed. They've done a lot in the product, and I know they're doing, as you say, a big transition from desktop to cloud. There's a lot going on with it, so it's good to hear they have brought out so much in such a short space of time. Well, I have something from Xero. Of course, it is the Xero App Store releases. A bit late this time, sorry, but at least I'm covering what came out in July at some point. So I'll run through some of these. I'll touch on the ones that were of little interest, and I'll dive into a bit more on some of the ones that are more interest. So firstly, we've got a system called Anrock that goes into every single type of Xero. So we're in the US, whether you're in the UK, where we're in Australia, but it is a US sales tax and global VAT compliance tool. Now, this is something that for US sales tax is very common. And so therefore, we would expect these tools. You've got something that's built into the US product anyway in Xero, and now you've got something that can work across any jurisdiction. So if you've got a UK license, you can be compliant from a US sales tax perspective. We've also now had a release of Vinyl. You may all have heard of Vinyl. It is the AI-powered meeting tool for accountants and bookkeepers. It has been in beta for a while now, and it has finally been approved as a Xero app, and I believe was put forward as one to watch by Xero quite recently. So I think they're at full release stage now. If it's something that you are looking into, which is AI-powered meeting notes and note takers, Vinyl's probably worth exploring if you're in the account space. They've got big objectives. And if you've ever seen Jordan talk about this, where they want to go, similar to what we're talking about with Sage, where their shining light is a big, objective in the way that they want to help accountants change the way that they deliver the service. They want to help us move from compliance to advisory, and giving us the data and the control around that from a meeting note perspective is what Vinyl is all about. We've also got a release of a system called Gather.nexus, which is a multi-entity financial management tool aimed at fractional CFOs. So it's all about consolidated financial reporting, intercompany control, but also recharges and reconciliations, which is exactly where Mayday has been playing for quite a while. And so it's, a bit of a challenger for that system. We've got others that are in other jurisdictions, but we've got AutoGold, which is a cloud DMS system for Xero. It provides VRM lookups, purchasing preparation, sales invoices, and reporting, but for the motor trade industry. And then we've got other systems such as CloudFuse and Core Loops. Core Loops is for tracking costs for commercial contractors, and then Field Insight, which is for the field and asset management software, HVAC, fire and mechanical and install and service teams, which we've actually got quite a lot of integrated Xero tools for this space. And then I think the last one I was going to touch on was a system called Triver. Triver, I think I'd come across before, but it's basically an invoice discounting tool. You connect into Xero and it pulls down all of your relevant information for basically receiving a cash flow boost when you've got the invoice out, but you've not received the money in yet. So yeah, that's a bit of a wrap up of the Xero apps for July. I also have a very small but very powerful release from Xero this time, which is SMS invoicing. Now, this has been out in Australia for, I believe, a year and a half. And what they derive from that is the median payment terms for invoices were 4 times faster for anyone that was sending an online invoice by SMS. And you can now do that from inside the UK. Essentially, as long as you've got the phone number inside the main contact in your Xero system, then you'll have the option to send by SMS in a little drop down where normally it says send via email or email out. You'll now be able to send it via SMS. One question that was asked when this was released is, does this work for WhatsApp? Unfortunately not. This is just an SMS service. We'll have to see if the WhatsApp functionality comes out in due course.
That SME invoicing from Xero sounds very exciting. I guess for particularly like small tradies in particular, probably where they're going on site to do bits of work for someone. But I think that ability just to ping that straight out almost instantly gives someone another format to receive something, and also be chased on as well. I think that's really cool. So nice to see. And I guess again, talked about this a little bit already, haven't we? So it probably replicates a little bit of what we're seeing out in the market from other apps and providing some of this functionality. And I think you mentioned about WhatsApp not being there at the moment. I'm sure at some point that will probably come, and then Signal, and then God knows what else will do to
all the platforms,
mental platforms that are out there. Anyway, let me wrap up the news then with a final bit from Webexpenses, who have just released expense cards into the product. So what they've done is not unusual. It's not unfamiliar to us, for those of us who are doing this kind of stuff. We've seen this from plenty of other people, but effectively, Webexpenses probably an underutilized or maybe under talked about product. I guess my experience is that Webexpenses have been around for a long time, at least a decade, if not longer, and have probably pitched themselves at probably slightly larger organizations historically, and had integrations into products that mainly the larger organizations would utilize. And so probably not that familiar. But they've just launched, like I say, cards in there. So these work in exactly the same way as you kind of anticipate. These are prepaid cards, fully integrated into the platform, and does all the usual stuff that you'd expect. So when you spend on that card, it gives you a notification or notifies the user, asks them to upload some information, gives you the ability to manage and control expenses in a more granular way than you would do with other platforms, or if it's out of pocket expenses. And obviously allows you to pay with Apple Pay and Google Pay, and create virtual cards in the same way as well that you would with the likes of, say, Pleo and others. So this is just enhancing their functionality. It's available for use. Transactions processed in GBP, and there's a relatively low exchange rate fee of 1.49% if you're spending overseas. And all of this is supported by Adyen and MasterCard, so you can basically use this card pretty much anywhere that you'd expect to use a normal card. The only thing that you can't currently do is you can't get this in Australia. So if anyone out there in Australia is listening to this, you can't currently get it. But certainly for those of us here in the UK, you can pick this card up and get it straight into the platform. And the best thing is that it's free of charge. There is no cashback or rewards program offered, but it's all ready to go.
Nice one. We're seeing more of this, I guess, in the flexibility in the different platforms. As you say, Webexpenses have been around for a long time, come across them many times. Don't think they market very well, especially to the accounting space. But maybe that's something they can build into. So today we are joined by Craig Morrall from Tugger to dive into the world of tugging or reporting as such. But the first thing that I want to ask you, Craig, because it's always made me smile and chuckle, is why have you called yourself Tugger?
Oh, you're not the first person to ask that, as you can imagine, Ryan. So my brother and I, we've been in software for many, many years. When you're typically writing code, you're dealing with repositories where you store your source code. You then had to pull that code down. We quickly started calling that internally as a bit of a joke, or tugging the code down. So then when we started talking about, we're going to look at pulling data from different systems, and that's where we obviously started thinking, we can go with, tugging the data, and then, wouldn't it be cool if we called it Tugger? And there's so many platforms out there that are pretty dull in terms of names.
Yeah.
So we thought, if we come up with something like that, bit tongue in cheek, a little bit cheeky, people will remember it, and everyone remembers it. No one forgets it.
I think that is the thing, right? That I think everyone is then inquisitive. I definitely was about, well, what is it that Tugger actually does? Is this something that I should be looking at or not? You're a bit unsure. And I think, look, I've referenced the fact it's a reporting, but that's like barely scratches the surface of what Tugger is. So tell us about, well, a kind of quick summary of what is it that Tugger's all about.
So it does 2 or 3 different things in reality. So, I mean, the concept, it's probably worth talking a little bit where the concept came from and how we got to where we are in reality. As I mentioned, been in software for a number of years. Chris and I co-founded another business called ACS. And in that business, we started actually doing a lot of reporting during COVID. So we sort of shifted away from doing bespoke software platforms and doing more around data analytics and that kind of thing. And what we sort of found quite quickly that it was very expensive to do it. And it was expensive for sort of a number of reasons. So the first of those was the fact that typically the systems you wanted to connect to, you couldn't easily get to that data. Somebody had to effectively write some code because they typically have a set of APIs or whatever you could talk to. But there was no way of saying, well, I just want to report in that on Power BI straight off. How do we do that? So we thought, well, if we can simplify that extraction piece, getting that data out of those platforms, then that solves one problem. But then the next problem we came across, well, actually, once you've got that data, where do you actually store that data? So then you'd need to warehouse that data somewhere. And again, there's another cost associated with that. You've got monthly costs for that. You potentially employing DevOps people, then you've got security concerns over all the data. So there's a whole big problem there. So what we were finding that when we were deploying these solutions to people, we were doing one-off almost like connections into these platforms, one-off data warehouse installs, and then they had to worry about what they would do with the data. So we sort of then came up with the idea of Tugger and thought, well, if we can solve all that problem, deal with the data extraction from a number of different platforms, and we can do the data warehousing, handle all the security compliance, and then the end users just have to focus on actually building the reports, then it can save people not just thousands, but tens of thousands a year in terms of what they would typically put in place. So where we've got to now is it becomes very, very simple for somebody to kind of start reporting. So people can report on things like the Xero data, QuickBooks data, and things with ease. And so that's essentially where it sort of came from.
Well, that makes sense, right? You've had a pain point that you've experienced, even trying to service your customers, and you're like, well, we feel we can solve this. We've got the know-how. We've worked in tech. Let's essentially create something with a funny name that can. And I think the right way of describing this is bring that skill set, those solutions that were only ever available for the bigger clients, the bigger businesses that have the money, down to a smaller client size where there's a bit more plug and play. They can get some stuff not only that is kind of tailor-made for them to some extent, but also out of the box. So you can do a bit of a blend. But the thing I've always found is when we come to reporting, if you're just trying to do that with the finance system, there's endless dozens of platforms that can handle that. But if you want to bring in operational systems, then essentially you're having to bring that in manually. But the way Tugger works is you're connecting not just to finance systems, aren't you? You're connecting to a broader range.
Yeah, that's correct. We don't just connect to finance systems like I mentioned, like QuickBooks. We can connect to CRM platforms, so things like HubSpot, job management platforms, things like Simpro. So there's a whole host of different platforms that we can sort of connect with and bring that data essentially into one reporting platform, essentially getting back to the idea of that one source of the truth. Because the problem we've got nowadays is every organization, no matter how big or how small they are, they've probably got multiple SaaS products that they're using.
Yep.
Because it's so much easier now for people to purchase a SaaS product that does 80 or 90% of what they need, as opposed to going and building a bespoke solution. So naturally, because we've now gone down this route of going, well, I'm going to plug this piece of software in, or plug this one in, there's always usually a disconnect between them all. And it becomes a massive problem when you've got your sales team potentially reporting out of HubSpot, you've got finance reporting out of Xero, And it's like, it's being able to bring that data together in one place so that someone's got a true picture of what's going on without having to do manual exports of data and putting spreadsheets together and that kind of thing.
Yeah, and it's becoming more and more critical for businesses to have access to real-time data and insights to drive their decision making. The more businesses I talk to, the more they're like, I've not got this visibility. So we're kind of doing everything on gut feel, but we know that there's a better way of doing it. And we've had a void for quite a long time in that, okay, well, I can get operational data in real time and a dashboard of that. I can get finance data in a real-time dashboard, but actually I need to slice maybe employee number and then number of jobs and then total revenue all in one kind of KPI metric. And that's not possible, as you say, without extracting that, putting it into Excel. And to, I guess, empower your team, to empower your employees, your decision makers, your key stakeholders inside a business, you need to give them that data in real time in an easy, digestible format, because we're always so blooming busy nowadays that if we don't get it in that format, we're never going to really look at it, or it's going to be outdated and not relevant anymore. So your vision, I guess, with Tugger and how you kind of base the system around is to solve that pain point, to bring all the data sets together, to empower the team. Was that always kind of your vision at the start, or were you just solving a problem more for what you'd experienced your customers?
There's probably there was the experience that obviously our customers had seen that we'd realized that actually it could become very expensive to build out these reporting solutions. There are products out there that work in sort of like the enterprise markets, but most companies don't operate in those enterprise markets. They can't afford to have their own, multiple BI developers, data scientists, DevOps engineers. They don't typically have those sort of roles. So that was obviously one issue to do that. But it was also getting to the point where actually you want to report in one place, because so many customers you come across, the amount of times they were literally exporting data into spreadsheets, and it still goes on now. We still see people, I've got this data in this spreadsheet. And, the beauty of the fact that because Tugger plugs into like Power BI is if you've still got an organization that cannot get away from a spreadsheet because they don't have a platform as well to store that data in, they can still drag that Excel data in as well and bring that in, but it's not kept in there. But they can use things like SharePoint then to have it automated. So if someone updates a spreadsheet, you can pull in the automated data and things like that. So you can still at least keep the reporting up to date as well.
Yeah. And I find that whenever people are doing things in Excel, the day-to-day tasks kind of get in the way, and then that's not as critical, so it gets pushed down the road and therefore isn't in real time. And you're doing that. You can pull it out essentially in real time. There's always, cycles, etc., that go through that. So you're not doing it every second because it doesn't make sense to do that. But the other thing that I think that is really good and really helpful is that from a dashboard perspective, the one system that people know more than anything else is Power BI. They're more familiar with that. So if you can get the data in a reportable format, someone that doesn't really use tech too much still has the probably awareness of knowing how to maybe change a filter or to click something. And if you don't want to be able to do that, you've got the customization and the flexibility to actually lock things down so it's read-only for people or filterable for others. And I think I like that balance between the bespoke and the out of the box and how that works. And I think the fact that you've called it Tugger is just a brilliant thing. We love a pun on this show. So I want to see a lot more adverts and marketing around tugging related activities, Craig.
Not a problem there. We've actually got a marketing campaign coming out in probably the next 7 days. That's going to have a few more cheeky adverts, shall we say, that are just a little bit edgy, but hopefully should stand out a little bit amongst the other stuff that you sort of tend to see on LinkedIn that's knocking around on there.
Nice one.
People particularly like our welcome email, which I think ends with something like along the terms of, happy tugging or something.
Oh, good. Well, thanks so much for joining us today, Craig. It's been a good or great insight into what Tugger's all about and the problem it solves. That brings another Digitals in a Cruel World podcast to a close. Thank you for taking the time to listen. As a reminder, if you haven't subscribed to our newsletter, please do. You'll get the news before you even get us to talk about it on this show. And if you ever want to have your say, get involved and join us for the live digital digest every week. We'll pick one of the probably main news articles and just dive into it with someone either from that app or someone that's an expert in the industry on whatever the release is related to. But more important than any of this is the Digital Disruptor Awards coming up in September, and would love you to come along and join the event. It's something that has had rave reviews last year, which was our inaugural event. And if you can't come and join us in person, which we'd love to meet you and experience an amazing night on the night before Accountex, then please do subscribe and watch it live. It is something that is streamed live. We'll be doing some entertainment, some interesting little bits we'll reveal over the next few weeks. And we had lots and lots of listeners, watchers, viewers, whatever you call them, from last year. Make sure you're one of them this year. And we'll join you again with a podcast next week. Thank you again for listening.